Yeah, so hi everyone. Welcome to a new video uh, by Darwin at my DCA. And I'm Lakshya Chabra and I'll be presenting to you. And so today we are going to discuss about Kaycee Industries. So how did Kaycee Industries came into my mind or into my research radar was like it has. So basically the Kaycee Industry share has fallen a lot from its high and it did give a very wonderful run up in the past. So if you just simply see it, so it's been like 50% down from its all-time high. So I just thought, why not to let's just explore it. Although the PE ratio is very high, but I just thought, why not? There might be something deeper going on, and this ratio might seem to be optically higher. But let's see, then that's. So Kaycee Industries was acquired by Salver Electronics in July 2019. So Kaycee was a small company, very small company, 21 crores company only. And Salver Electronics also a very small company at that time, 180 crore company. But if we see a relative comparison, Salver was much greater than Kaycee Industries. And hence it was kind of an acquisition where a little larger player acquired a smaller player. Also, they were both into the similar kinds of businesses. Rather, Casey was a direct competitor of Cellular Electronics in terms of their cash cow product, Cellular cash cow product, which was cam operated rotary switches. So Casey was a direct competitor in that. So that is the reason, primary reason, why Cellular acquired Casey Industries. So that was sometime in July 2019. So if you could see, that triggered an open offer at that time. And then after that, it was like the competition in the market will get concentrated. So both the companies are gonna make higher margins on the product. Also, one more reason for acquisition of Kaycee Industries by Salzer was also that uh, Kaycee was operating in Maharashtra while Salzer had all its plant in Coimbatore. So a little geographical expansion kind of thing. So the major run-up has been somewhere in here, but if you just still see a 5-year chart or something, it was like really kind of cheap or something. But then after that, everything could be seen in the financials only. So this was the time somewhere when it was acquired by Sagar Electronics. After that, a year of disappointment where there was no growth in sales or something. That was primarily because of the COVID year, but after that, things started to turn around. And management throughout this time was saying that there will be an improvement in EBITDA margin, will grow by 50-60% in sales growth this time in KC or something. So I have maintained a document for you for that thing. So let me just look at it. So here it is, the PDF of all the snapshot. So this is basically wherever I could find the name Kaycee Industries in the conference call of Sals Electronics, because Kaycee Industry doesn't do any management conference calls or investor presentations. So uh, from here only I have got to know all the sources. So I'll be uploading this in the description in the video itself. You can check that out. But here the management has said that has been constantly saying that we'll grow by this percent, and they are of that opinion that in 2 to 3 years there will be a 100 crore revenue company, the Kaycee Industries. But there is one catch. So the catch is that the Kaycee management, like basically, what's the plan of management with Kaycee Industries? So that is something that we have to look. So the management said that I think we have seen a lot of synergies, and we have seen Casey's margins improve significantly, as well as Salz's margin, the CAM operated rotary switches. That is the place where both the companies were in, and where Salz acquired Casey and improve significantly. So having said that, I think going forward, idea is to make Casey definitely a 100 crore company in the next 2 years at least, by adding products that Salz is not manufacturing or not intending to manufacture. So we are trying to use Kaycee Industries to compete with other medium and low cost manufacturers of various electronic products, electrical products. So that is the thing. They don't have any idea of corporate restructuring. That means that management has said that they don't have any plans to delist the company or acquire it 100%. Rather, they sold 1% equity in this Kaycee Industries just because the share did run up a lot and management wanted to make a little profit on that thing. But the management said that their holding, equity holding, won't go under 70%. So that is the thing. Now, moving on. So coming back to the thing, so we have discussed this, discussed why Kaycee Industries was acquired by Sadler Electronics. We have discussed the turnaround thing, uh, which can be seen in the margin itself. Here's it. So what I believe now going forward is that even if the management has said 100 crore revenue further somewhere here, and I believe the margins have like sort of uh, came to the peak or thing because the management has 2 3 years, full 2 3 years to expand their margins and everything. So going forward, I don't think there will be much margin expansion. Looking at this commentary from management in here, where they said that they do not want to intend to make those products. Uh, they want to make those products via Kaycee, which Salzer doesn't want to enter into. So this means that these might not be that much profitable products or something. There might be some products where your margins are low. You are competing with other low cost manufacturers or something. The market might not be very large in here. So I don't think much of a bright future for this company. Maybe because I'm exposed to very little information. That is the reason why. But my views are personal. And one more thing, let's just discuss the valuation part. That is the only thing that I wanted to discuss much about it, because I believe it's extremely expensive. Expensive. But before that valuation part, let's just one thing in this Kaycee Industries, that is, Salzer has been a good company in terms of like diversifying from a major product into many products over the years. So now they want to diversify into electrical vehicle charger manufacturing, and for that, Salzer did a joint venture with another company. Uh, and in that existing joint venture, they were struggling a bit with the technology. So that is why, via Kaycee Industries, they acquired a fast charging manufacturing company. They acquired 30% stake in that. So Kaycee Industry basically acquired 30% stake in that, and Salzer holds a 70% stake in Kaycee. So that is the catch here. So let's see how it pans out. But still, now coming to the valuation part, uh, you can see, let me just zoom in a bit. Yeah. So I'll just explain this to you. So what happened is, let's just assume that the earnings are gonna grow at 30%. So that I have assumed the assumption that in the next 3 years, the company's revenue will be likely around more than 100 crores. So that just gives it a growth rate of more around 30% only. Number of years will be three, and I have assumed in the current earnings, I have assumed the EBITDA of the company, and then expected return. Let's just say that you want a 10% return on from the share going forward in the 3 years. So do you and you have an exit P. So all these blank, all these white spaces are your inputs, and all these gray spaces are your outputs. So and your exit P meaning, let's just assume it as your exit EV to EBITDA. You assume it at 28. Why 28? Because Salzer, which is a similar competitor, which has similar business, trades at a 28 PE. But let's just assume 28 as the EV EBITDA thing. So that comes out to be like, so all these inputs gives us that we should buy the company at around 376 crores of market cap. Now, the thing is, the company is trading at around like uh, 768 crores of market cap, which is too high with these very, very, very aggressive assumptions. So I don't think there's any return going forward. And let's just look at the scenario where we are present currently in. So currently we are at like more than 100 PE, but let's assume that we are at 100 PE and the share comes to 40 PE in next 3 years. Still, we are sitting on a minus 4% returns. Also, somewhere in the con call, the management has said that going forward, they're gonna be like like slowdown in these 2 quarters. So here's a snippet. We expect Kaycee to continue to do a similar growth in the coming quarters. The markets are becoming challenging, and also the growth is slowing down a bit. We are heading into the second half of this fiscal with a comprehensive product portfolio encompassing numerous products and collaboration are blah 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 blah. So that is the thing. The management has said that. So to me, the business seems very expensive. Now the views are personal. This is not a buy sell recommendation. This is something which I just wanted to share. So my goal here is like any business that I am studying. So I share it with you because it will just add on to your like our analysis basically. If you have a contrary view or if you have something else in your mind, you can definitely share it in the comment section below. And that is it. You can drop down. I think the company is very ordinary and not much stuff is happening here. Management doesn't have any intention to do to venture into new products or new geographies in next 2 to 3 years. So the company is like some expensive shit to me. So that is that. But all in all, no buy sell reco. This is only for educational and informational purpose. If you like the video, give it a thumbs up. Do comment and anything that you want, anything that you want to add into contributes are uh, welcomed and subscribe to the channel. Thank you so much. Thank you so much for seeing the video till the end.